Hello everyone, my name is Gabriel Stein. I'm Director Asset Management Services of Oxford Economics. Welcome back to another of our series of irregular podcasts. I'm sitting here with my colleague, the somewhat confusingly named Gabriel Sterne, who is of course the head of our global macro research, and we're going to talk about the share price development over the past 2 weeks, concentrating on China. To begin with, Gabe, you have just put out a research briefing on this issue for our clients, and one of the terms you have used to talk about what's going on and relate to historical episodes has been a tantrum. And I thought that was quite amusing and perhaps symbolic, because isn't a tantrum really the sort of illogical, hysterical shrieking of a child who doesn't get his or her way, and is that what you think has been going on?
Gabriel, I mean, you gave me some great comments on the note to that regarding the draft episode, and naming these things is really hard, isn't it? Because there's in two dimensions. First of all, what are they? I mean, tantrum, as you say, is some emotional outburst. So the taper tantrum was maybe some irrational outburst. Was this a irrational outburst in China, or was it rational relating to bad news in the economy? So when I put this piece in the FT, they actually changed the title from tantrum to squall. So I don't know if these things are squalls, but
a squall by contrast sounds like a little bit of wind and the waves perhaps lapping the jetty.
I mean, it's tricky, isn't it? I mean, let's call it an episode. I might slip into tantrum at some point, but let's call it an episode. I mean, the other is just what do you call them all? So we've had 4 of these things up to now. I think we had the taper tantrum, which is a tantrum.
Yes,
we had the
October 2013.
Right, mid 2013. We had the October 2014 rupture.
Right.
We had the Putin oil episode at the end of 2014, and now this is a China slowdown episode. So, I mean, just naming them all in the kind of what do they represent is tricky as well. So I do wonder if, the World Meteorological Organization just goes through the alphabet, and the first 4 for 2015 were Anna, Bill, Claudette and Danny. So I wonder about tantrum Danny, squall Danny. What do you reckon?
Well, funnily enough, the Chinese word for sharp fall is diao. So maybe this should be the diao episode, but most people probably wouldn't get that. But let's ignore for the naming convention, fun though it is. You've looked at how this episode event compares with others, with the ones you mentioned and others in the more distant past. Do you want to talk about that?
I actually found it really illuminating and very interesting to put this in context. And if you put it in the context of those episodes I've just mentioned, in equity markets it's really big. It's a really big deal. The spike in the VIX was way bigger than any of those recent episodes. And actually what we do in the research is not just look at those episodes, but go a bit further back over the last 2 decades.
Let me just ask you one thing on that. You referred to the spike in the VIX, but is the VIX related, is that a direct mirroring? Well, it is the volatility, so it's a direct mirroring of the equity markets. So what you're saying is this was actually more serious when it comes to equity prices than quite a few previous...
Yeah, I look at the VIX, which is volatility. I also look at the changes in equity prices on a similar outcome. Both measures, really big deal. Okay. Really big deal. Not just in terms of these tantrums, but as I say, these old crises that we all know about, LTCM, Russia, the dot-com burst, the euro crisis. Actually, in equity markets, it can, in the VIX, it rivals those. Not quite as big as some. Nowhere near as big as the global financial crisis, of course.
I should think not, and that's quite crucial. I think we'll need to get back to that, but do go on,
Well, I'd also say, obviously very big in commodity markets, especially oil and metals. It swamps some of the impacts we've had before. Other distinguishing features of the market reaction. Now, currency volatility, in fact, although it was triggered by the depreciation of the Chinese currency, the renminbi, currency volatility in the major economies actually wasn't as big this time. It was big, not as big as previous episodes. In the major economies, it was bigger in some of the EM.
Is that because they are more likely to be directly affected by China, whereas actually other recent currency trends that we have seen, somewhat strengthening of the dollar and so on, that would happen anyway, and this would just reinforce them?
It could be, and we've got a note by our colleague Adam Slater looking at that coming out in the next day or so, so definitely watch out for that. I mean, there's also, actually, I think it was quite interesting that the decline in bond yields was really small, given the decline in equities, which in turn, I guess, represents a decline in earnings expectations.
But bond yields don't really have that much more scope to fall, do
exactly. I mean, so you've got zero bound issues there. And related to that, now, if you look back across a lot of these episodes and crises, it is almost unprecedented to get the euro to appreciate against the dollar. This is a bit here. It went by 7% at one point, and that. Because the dollar's a safe haven, right? The dollar is the safe haven. So why is the euro appreciating? And I guess that is related. The two possible explanations for that. One is just about the zero bound issue. Euro yields at the zero bounds. Dollar yields can fall a bit further, narrowing the interest rate differential. So let's go and buy euros. And the other is some people say that the euro carry trade is unwinding. Some even say that euro's been used as a funding currency. That's maybe a little bit speculative because risk is hedged in banks, but there's that issue.
But can I advance another hypothesis, that much of the dollar rise that we have seen, while of course some of it is predicated on stronger US growth, and that's materializing, it's also been predicated on the fact that the Fed is assumed to become the first major central bank to raise interest rates, and until very recently, September was generally seen as the month when this really symbolic rise would happen. The Economist has just published a piece where they say American 9-year-olds, when they go back to school, they've never experienced an interest rate hike. And so the anticipation of higher US interest rates would have driven the dollar higher, but market feelings, market panic, tantrum if you want, meant also that markets scaled back their expectations of when the Fed would raise rates to possibly October, perhaps more likely December, which is of course our main scenario right now. And as a result, the dollar fell back because of that. Would that have played a role?
Yeah, I think that's very related to the issue. I mean, you put those issues very nicely about the Fed rise. Yeah, I mean, so that I agree with that. I mean, the other issue about this episode that I'd draw out is on emerging market currencies and EM risk as proxied by the IMB. And there's a lot of focus on EM. They actually did move quite a lot. But the moves in EM actually don't stand out relative to previous crises. Probably a little bit more, an episode, probably a bit more modest. So, I mean, yes, EM is worrying us at the moment, but the moves this time, in the grander scheme of crisis and episodes, haven't been actually that big. I don't know if that's any comfort or not.
Well, I don't know. I mean, I was in Japan during the first week of this, and one of the things which clearly concerned the Japanese was that one of the big movers, I believe, was the yen, and the yen as a safe haven, which of course is the last thing they want. But it is surprising that emerging currencies didn't move. Is that because there were already some moves earlier when the RMB was depreciated, or any other reason?
I mean, I think they did move, so I'm not underestimating the extent and the importance of those moves. But yeah, the previous moves may be important, and also just crises, episodes equals risk off. EM always go. I think that's the.
And you mentioned the key word there, the C word, crises. Okay, so we had an episode, a squall, perhaps a tantrum. Is this a crisis? And if it isn't, when is there a crisis?
I mean, that's a great point. Now, what I try and do here is to think what is the difference, and can you have some scale of measuring when these episodes risk going into crises? And so I'm going to have 4 factors. How big is the initial shock? Big, I'd say, really big in this case.
That's a safe bet. Yes.
How strong is the interaction between the shock and the real economy? I mean, you could argue in something like the taper tantrum that ish, but not huge. There was an overreaction.
Yes.
I'd say in this episode, really big again. This is one of the most important things in the world economy, a Chinese slowdown. So big interaction, world trade falling.
But the question there, perhaps an important point if I can interject, is cause and effect. Because one of my pet theories about this is that the fall in share prices in China is of course important, but what's really important is what it signifies. It signifies the realization by the Chinese authorities and by markets that the Chinese economy is growing much slower than the official 7% number, and also the realization both by the authorities and by markets that there's precious little the authorities can do about it.
Yeah,
right.
Well, that leads me nicely into number 3, which is how much capacity is there for policy to respond. And I think this is a big worry at the moment relative to other crises, other episodes. There can rarely have been a time in history where certainly monetary policy feels like it's almost out of ammunition. And so I think that is a big worry, that there isn't that much scope. I mean, I'm sure you can get more creative somehow, but it feels like
there are things they can do. But if you go back to what they did in 2008-9, when there was a massive monetary and I might add fiscal, but above all monetary stimulus, but of course that almost instantaneously led to higher inflation and a mushrooming of bad loans in the banking system, which they're currently having to deal with. So in essence, theoretically yes, in practice no, they're not going to do it.
Right.
And that's what's worrying you, if I understand you.
Right, yeah. And then the final point is it a repeat concern from a previous episode? And I think a lot of the impact this time is very similar to what we saw at the end of the last year. There was political worries about Putin and Ukraine, but also a big oil price decline happening around the same time. And in some ways, I mean, what didn't happen that time, and actually, well, you didn't get a massive fall in global equity prices, but apart from that, very similar issues. And it's just that we're getting more and more worried about China, and as you say, the downward revisions. So I think there is scope on all these grounds to worry, and there is scope for this to become a crisis.
Lehman crisis? Is China Lehman Brothers?
Not in our opinion, I think. I don't think this is a Lehman moment. I know you don't either, Gabriel, because I think you made that point to me. And I guess the reason is that there are some good things going on in the world economy. The US, as you've written nicely on, Gabriel, is rebalancing. The global financial system is stronger. So I think there's a big risk. I mean, I think maybe 30%. I think that's what we're running with. That the China slowdown could get more severe, and we're already below consensus on a baseline, and it could get more severe, such that global yields rise nothing like as fast you see, for example, predicted in the Fed's, the FOMC dot plot. But I would say a small risk that we reignite the global crisis.
Okay, so bad news, but not a repeat of 2008. I guess that's good news. Quick question, should this stop the Fed from raising interest rates either in September or December?
Well, I mean, that's a good question. So
assuming nothing more happens.
Well, to me it doesn't feel like the right time. This is personal view. To me it doesn't feel like the right time for the Fed to raise. Just the world's in a fragile state. And why raise and cause more volatility when you've just had such an episode? But others may take different views, and there are risks on the other side. So maybe I should let you close, Gabriel. I'm not sure you share that
that's
view.
Well, I have an opposite view, but let us simply say this is something which we'll continue to discuss. We will discuss it, the world will discuss it. We will have to wait and see. Thank you very much, Gabe, and thank you everyone for listening. We'll be back with further podcasts on this and other topics.